Good afternoon, everybody. Jason J. Hamilton here, and today I want to talk to you a little bit about the recent market turbulence and life transitions. I'll be with you in just a second. All right, welcome back, everybody. I hope you're all doing super well today. For those that do not know me, my name is Jason Hamilton, and I'm a chartered retirement planning counselor and the admin of this group. And what I want to talk to you about today is the recent market turbulence that we have been experiencing, what you should do about it, what you shouldn't do about it, some of my thoughts, and then I also want to talk a little bit about life transitions. Actually, I think I'm going to get into that first. So this last weekend, I was up in the mountains doing some camping with some of the teens from the church I go to and doing a weekend retreat type of deal. And what I heard was so similar to what I hear folks speaking when dealing with retirement that I really wanted to discuss a little bit more here about some of the thoughts and really how it's so interesting to see how so many people, regardless of their age, are feeling the same way. So a lot of these teens were going from either middle school to high school or high school to college or college to graduation. And the thing they had in common was that in reality, they're all facing a big life transition. If you are planning for retirement sometime soon, you may be feeling some of the same things. Let me ask you if these questions sound like some of the things you've been going through. What do I do next? What's it going to look like when I make the transition? How's it going to feel when I'm in a completely different place than I'm going to every single day? I don't know what I want to do with my life, right? I think that might be the biggest one, because when you're going from college to the real world and you don't know what you want to do, I think that's actually really similar from going from working. Maybe you worked for the last 30 or 40 years, now going to a new stage of your life where you might actually have 20, 30, or 40 more years to do really whatever you want. The benefit that you have is if you're going into retirement, most likely you are financially independent. So you have some huge advantages over someone just getting out of college. But in reality, it's very similar to the challenges. At the end of the day, there's just unlimited options. And so with so many options, then it can get you stuck a little bit on what you should be doing. Don't get me wrong. I know there's plenty of folks out there that all you want to do is play golf, and you think that you're going to be totally content and fine with doing that for the next 30 years. Well, from my experience, usually about 6 to 9 months is that, we call that the honeymoon phase, where you could play golf 3, 4, 5 days a week, do some yard work on the weekends, take Sundays off, and you're just fine. But then at some point, the days just seem to kind of meld together, the months start going by, and you realize that you might have a lot more time than you think on your hands. So really figuring out what you want to do and taking the time to really map out what your life is going to look like when you make that transition is really important. So for those of you that are going to be retiring in maybe a few months or a few years, here's the thing that I recommend that you do. I would actually take some time and sit down and ask yourself some very, very serious questions, okay? First question I would ask is, if you can do anything you wanted to do and make an impact on this world, what would that be, right? Because I think most people need to have some sort of purpose, right? And you don't want to just show up and do something that you're not passionate about or you don't get excited about. So what are those things that you really would like to do and really like to make an impact on before that you leave this existence? I think that's a good first question to start with. The second question I would ask is, what if you found out tomorrow that you had 5 years left to live, right? And you weren't going to be sick, nothing, you weren't going to feel anything, but you had 5 years left to live the best life you could possibly live. If that were the case, what are those things that you would be doing with those 5 years to make sure that you maximize all of that time together? I would definitely map out the answers to those questions and go really deep if you can. And then another question I would ask is, what would happen if you had 24 hours left to live? And please don't get me wrong, I'm not trying to be morbid here, that's not the point. The point is that, what if every day you lived in retirement like it was the last day of your life and maximized everything you could with those situations, with the opportunities that you have? That's what I was talking about with some of these teens and the folks graduating college is, Well, at the end of the day, what would you want to do if you could do anything that you wanted to do, regardless of how much you got paid for it? And if you found out you only had one day left and you lived your each 24 hours like you only had that day left, what are some of the things that you would do to make sure that you accomplish every single day? And so that's where we really started, and I think that's a great place to start if you're going through a life transition like retirement. So hopefully that helps you out a little bit to get you thinking a little bit differently on making this transition. The other thing I want to talk to you about today is some of this market turbulence that's been going on lately. If anybody has been feeling a little bit stressed out, can you please let me know in the comments with some of this market turbulence that's been going on lately? I would appreciate your feedback, because I've been, most of my clients have been totally fine. They're in the right portfolio. Everything is good. But there are a few that are just a little nervous about what's going on. And so we've been chatting and really talking through what's currently going on in the market. My interpretation of what's going on now is really that this is a pretty unique situation. This whole year in general has been a pretty unique situation with some of the things that are going on in the White House with tariffs. We have interest rates that are going up, and we have just a lot of turbulence that's going on in our economy, between the NAFTA deal and all these different things that are going on. So what I'm telling my clients is to focus on what you control. And if you're not a client, then I'm definitely going to tell you the same thing. Focus on what you can control, okay? Neither you or I or anybody else in this group can control what happens with the stock market, okay? Now is not the time to be trying to time the market, jumping in and out, thinking that you're smarter than everybody else that's out there. This is not the time to do that. That is actually one of the things that can lead to failure of your investment returns by trying to hop in and out of the market. Something that's really important, though, are the things that you can control, right? So what are those? What are the things that you can control right now and make sure that you are staying 100% on top of? And I just had a question asked in the group recently about, there's some fees that you're paying, right? So fees that you're paying for your investment management can definitely be something you can control. Here is the big argument that I'm going to blow out of the water, okay? Some people think the best thing they could possibly do is just put all their money and manage it themselves and put in index funds and keep their expenses as low as possible. I think that's a great idea if you will not make any changes and you will just stick to your plan and not do anything throughout whatever market turbulence may come, okay? On the other hand, most people that invest on their own, and there's a Vanguard study, you can search this, value of a financial advisor Vanguard study. I recommend you search that online because that's some great information. But the last I checked, what the Vanguard study says is that the average investor is going to underperform the market or underperform someone who has a financial advisor by about 3%, okay, on average each year. That 3% is because people are jumping out of the market at the wrong time, they're jumping back in at the wrong time, so they're selling when it's low, they're buying when it's high, they don't have a strategy that they just stick to that keeps them invested and really has the right sort of risk tolerance, the right sort of behaviors, and have someone there to coach you and guide you. So even after paying, and they think they use like a 1% average for the cost of working with an investor, the investors that did have an advisor did, on average, again, have a 3% better return. So someone lost 30% in 2008, they stayed the course, that is excellent. But it's been 10 years, it's been 10 years since 2008, and we're due for some volatility. I think so many people have gotten way too comfortable thinking that they are just these spectacular, amazing investors because the market has just done so well over the last 10 years. Don't get me wrong. You may be wonderful. You may have gotten all the things perfect. But for the general population who investing and market understand or market knowledge is not your specialty, I think it definitely makes sense for you to work with an advisor. But either way, you want to control your fees, okay? I think if you're paying 1% or so, somewhere close to that, plus or minus 10 basis points, I think that's a really average rate if you're working with an advisor, especially if they are taking care of other things beyond investment. So Social Security timing, tax efficient withdrawal strategies, Roth conversions, all these other things that come up in retirement. There's a lot of things that go into retiring with confidence. So please make sure if you're paying for an advisor that they're helping you with things beyond investments. If they're not offering you tax planning advice, if they're not helping you connect with an estate planning attorney to make sure all your documents are in place, if they're not working with you on cash flow strategies to make sure that you have the most efficient withdrawal strategy so you keep the most money, and even Roth conversions, if they're not doing those things, then you may be overpaying a little bit, okay? So I want you to watch out for that. The other thing that you can definitely control right now with some of this volatility is your asset allocation. So what that means is, are you looking at this volatility as something to be fearful of, or are you looking at it as something that you can take advantage of? And once you understand that the markets, I see market volatility as a great time, as long as you don't need the money in the next 6 months or a year or whatever it may be, but it's a great time to take advantage of doing things like rebalancing your account. So what does that mean? Well, when the stock market goes down, typically your bond or your fixed income portion is going to go up. Not always the case, because right now we have rising interest rates, but generally that's the case. So in that case, then I would sell off some of your bond funds and I would buy more of the stock funds that have gone down. That's called rebalancing, to get back to your asset allocation that you originally designed. If your funds are moving more than you're comfortable with, if you're seeing this most recent decline and you're freaking out, that's not good. That probably means you're not invested properly according to your risk tolerance. Yes, there was, I've seen 3 or 4% movements depending on the portfolio, but that's not a lot in the scheme of things. If you're freaking out at 3 or 4% movement, then you definitely want to reevaluate your investing strategy. I think that's really important. So, and then the other thing I think you can do that I want you to do right now is to just stay the course, okay? Elections are coming up November 6th. I know people are thinking, I should take my money out of the market because there's probably going to be some changes once the, if the Democrats get in the House, people think the stock market's going to go down. If the Republicans get control of the House, and the stock markets are going to go up. What I want you to do, and please listen, this is so serious. What I want you to do is just stay calm, stay the course, stay invested, and do not do anything drastic, okay? If you have to, turn off the news, turn off the TV, shut it all down, because the daily market news, and it's just going to get in your head, it's going to make you crazy, and their whole job is to make you crazy so that you stay on and watch their commercials. They want you to be in fear. They want you to be shocked. So they're going to continue to hammer you with this information, okay? I'm not saying don't pay attention to what's going on in this world completely, but if you find yourself starting to react according to your emotions, according to fear, and not based on data, that is the wrong direction you should be going. That's not the right direction to be going. If you're going to make changes in your portfolio, you want to make them based on data, based on things that are outside of you or your feelings about what you feel about things, and really make sure you're doing things for the right long-term strategy, okay? So if your strategy, there was a comment earlier in the group that someone had 4% returns over the last 5 years. That's pretty bad. I haven't, I think I have some like 60% stock portfolios, 60 stock, 40% fixed income portfolios. And those are still at like 16 to 20% over the last few years of return. So if you're getting 4%, not good. Okay, so you might want to reevaluate that strategy. But if your returns over a 5-year period are doing well, are at least in line with the benchmarks, and you're paying reasonable fees, then you should just stay where you're at right now. Okay. So for those of you that aren't sure that maybe you're paying too much on fees, or you're not sure if you're in the right portfolio, if you're invested properly for your timeline, your risk tolerance, and your goals. If that sounds like you, then I definitely want to help you out, okay? I only have a couple weeks left before I leave out of town for a couple weeks, so just a heads up. The first 2 weeks of November, I will be gone, but then I'll be back shortly after. But if you want to get some feedback on your portfolio, on your investment selection, and on your goals, I definitely want to help you out with that, okay? So I'm here for that. These are complimentary consultations. If you want help, I'm happy to review for you. You can go to my website here, go to kisplanning.com/apply. There are limited spaces. I'm telling you, I have a lot of things going on with client work I'm trying to finish up, but I do have a few spots in there, but once they're taken, they're gone until I get back. So I definitely recommend you take advantage of this, because this is a good time to do it with all this market volatility that's going on. I want to help you sleep well at night. I want to help you stay the course so that you don't ruin your investment plan. I want to help you just stay on track so your retirement is fully funded and you're not living in fear. And by getting the right portfolio design, getting the right mindset, getting the right guidance, it will just really help you stay on track and not make any irrational moves that could cost you a lot more in the long term than getting really smart decision and really smart advice now. So I'm here for you. If you need anything else, you guys let me know. But I just wanted to hop on really quick and chat with you just to remind you to stay the course. Make sure you don't make any drastic moves without proper information. Don't just do it because you're scared or you feel like or you think this or you think that. Make decisions based on real data, okay? If you need help, you need an advisor, you need someone that can help you out, I'm here to help you guys, okay? If you have any questions, quick ones, go ahead and drop them, post them in the group. As you can see, I've been in there today answering some stuff in between client work. I like to take a break and help you guys out when I can. But other than that, I will see you shortly, and you guys have a great day, and stay focused, keep invested, don't make any irrational moves, and we'll talk soon, okay? Have a great day, guys. Bye-bye.